Brad Williams, Frugal Finance, accredited investors. What is an accredited investor and why should you care? And what does it mean to be an accredited investor? Under the federal securities law, only persons who are accredited investors may participate in certain securities offerings. One reason these offerings are limited to accredited investors is to ensure that all participating investors are financially sophisticated and able to fend for themselves or sustain the risk of loss, thus rendering unnecessary the protections that come from a registered offering. Unlike offerings registered with the SEC in which certain information is required to be disclosed, companies and private funds such as a hedge fund or venture capital fund engaging in these exempt offerings do not have to make prescribed disclosures to accredited investors. These offerings involve unique risks, and you should be aware that you could lose your entire investment. Who is an accredited investor? An accredited investor, in the context of a natural person, includes anyone who earned income that exceeded $200,000 or $300,000 together with a spouse or spousal equivalent in each year of the prior 2 years and reasonably expects the same for the current year, or has a net worth over $1 million, either alone or together with a spouse or spousal equivalent, excluding the value of the person's primary residence, or holds in good standings a Series 7, 65, or 82 license. Financial professional license, the General Securities Representative License Series 7, the Private Securities Offering Representative License Series 82, and the Licensed Investment Advisor Representative Series 65 are professional certifications and designations for financial professionals, etc., etc. You can read up on this. There are other categories of accredited investors, including the following, which may be relevant to you. Any trusts with total assets in excess of $5 million, not formed specifically to purchase the subject securities whose purchase is directed by a sophisticated person, or certain entity with total investments in excess of $5 million, not formed to specifically purchase the subject securities, or any entity in which all the equity owners are accredited investors. In this context, a sophisticated person means the person must have, or the company or private fund offering the securities reasonably believes that this person has sufficient knowledge and experience in financial and business matters to evaluate the merits and risk of the prospective investment. How do I calculate my net worth? Generally, to qualify as an accredited investor under the net worth test, you must have a net worth that exceeds $1 million, either alone or with a spouse or spousal equivalent, at the time of the sale of these securities. If calculating joint net worth with a spouse or spousal equivalent, it is not necessary that property be held jointly and the securities being purchased do not have to be acquired jointly. Calculating net worth involves adding up all your assets and subtracting all your liabilities. The resulting sum is your net worth. The value of your primary residence is not included in your net worth calculation. In addition, any mortgage or other loan on the primary residence does not count as a liability up to the fair market value of the residence. If the loan is for more than the fair market value of the primary residence, i.e., if your mortgage is underwater, then the loan amount that is over the fair market value counts as a liability under the net worth test. Further, any increase in the loan amount other than for the purchase of the primary residence in the 60 days prior to your purchase of the securities, even if the loan amount does not exceed the value of the primary residence, will count as a liability as well. The reason for this is to prevent net worth from being artificially inflated through converting home equity into cash or other assets. The following table sets forth examples of calculations under the net worth test for being an accredited investor. And you can take a look here. It's pretty straightforward. We have these three characters up here. So we have a home value, we have a mortgage, we have home equity line, et cetera, et cetera. So you have total net worth, which is 1.22 million. You have liabilities, which show 100,000, 200 grand. So it shows a net worth of $1.2 million, accredited investor. You're going to see this home value and this mortgage. It's excluded in 2 to 3 cases, where in this particular James Lee is underwater here, and you're not going to see this valuation unless you're underwater. You're going to subtract this 100 grand from your net worth. What they're looking at here is just your assets. So if you add up these 4 items, you're going to get that 1.22 million, and then they're going to subtract the liabilities, in the end, you're going to see a net worth a little over $1 million. If you have any questions or concerns about how to determine whether or not you're an accredited investor, comment. Brad Williams, Frugal Finance. Thanks for watching. Hope that helps. See you soon.